Hello, everybody. Thank you for joining us for today's public webinar. Good morning, Jim.
Good morning. Good morning. So I talked to two very professional people that I've known for quite a period of time, both heavily involved in the institutional world this weekend. One is heavily embedded in the hedge fund area, and another with one of the prime brokers. The conclusion that we all came to, and I actually started it, I said this is one of the most unusual markets that I have seen in at least 25 years. That was seconded by both parties. And the one party has been trading just a little bit less than I have. I think the reason that is so important, so relevant to you, is that the uncertainty out there among the institutional side of the business is as wide as I have seen it. The reports I get of the portfolio managers are terribly frustrated because the markets don't have the depth to them. There's no leadership, and the increase in retail business has increased sharply. During the pandemic, when there was too much free money around, we had a huge influx of new individual customers in the market. And those retail customers changed the complexity of what happened on a daily basis. The volatility increased, the ranges were wider, etc. Most of that money, I believe, was lost, and that market went away. And we went back to a more normal environment. Now, recently, and it really started since the market hit new highs a few months ago, that attracted, from what I can see, an awful lot of retail investors back into the market. Classic FOMO, afraid of missing out. So much of today's trading is individual, very short-term retail traders. The institutional money appears to be almost totally on the sideline. If there is any real trading, it's in the fixed income market. And last week, even the institutional side of the institutional market got crushed last week. I don't know if you watched, but at one day we had a huge shoot up in the 2-year, and it was just a huge short covering rally. So there's a tremendous, from what I can gather out there, there's a tremendous amount of pain and frustration on almost all sides of the institutional business. So what does that mean to us as very short-term, heavily oriented towards daytime frame trading? I use the term so often that be careful because there's no adults in the room. When I use that phrase, that's an indication that the institutional business isn't there. When the institutions are in the market's a little bit more controlled. You still get volatility, but you don't get the extreme volatility that we've had in the past few days. I'm just going to show you, when I talk about that volatility, you see the market that, huge moves to the downside, strong recovery and continuation. When you net it all out, we really haven't gone very far. But that kind of volatility is usually an indication of an awful lot of very short-term traders. So what does that mean to you and I? It means just be aware. And when you get some of these volatile moves, don't be too anxious to fade them or go against them. As I say so many times, you are better off being a little bit late rather than a little bit early. The other thing that I think has to be considered. In, I believe, if my memory is right, it was probably around the mid-1970s, where we dealt with what we called stagnation, high inflation, and continual increases in unemployment. Now, I don't know if we are in a stagnation period or entering a stagnation period, but from what I see in the market, I think the chances of that happening or in the process of occurring is relatively high. That puts tremendous amount of focus on two major reports for this week. First, we have the FOMC announcement from the two-day meeting on Wednesday afternoon. And of course, recently, the inflationary numbers have exceeded their dream or their expectations. So it's going to be very interesting to see what comes out of that meeting. What are the choices? I mean, they can still indicate they're going to reduce rates later in the year. They can indicate they're going to, more likely they'll keep it higher longer, or it could even be that they feel that they don't rule out another rise in rates. I mean, that's a broad spectrum, and that can bring increasing volatility. But following that, as I talk about this potential for inflation, for stagnation, following that, we've got the jobs number, the monthly jobs number on Friday. And I'm going to suspect that that is also going to be fairly volatile and very closely watched. So from my standpoint, it is unlikely that I will do many trades at all in the next couple of days. I just think the market is too thin. I think it's too thin and too subject to volatility. I mean, I may do something, but I'm certainly not going to be sitting here with looking for any extended positions. I think the uncertainty is really high. When we look this morning, we're coming into this morning, you can see the settle, and overnight inventory is 100% long. We know when we have inventory that's 100% long, that the odds are about 75% that we will get a counter auction or selling relative to overnight inventory. About the 25% of the time you don't get that counter auction, that's usually a pretty good sign that the market's got some strength. All right, at this point, let's stop and do a commercial. As you know, you've heard so often, the reason we do these programs is to continue to draw attention to our educational program. And the next educational program coming up is the primer that starts in early June. There's always, when we talk about the primer, there's always people that balk at the requirement to have the foundational eCourse ahead of time, or at least have attended a previous primer. And the reason for that is that no matter how much people think they know about the profile and how we look at markets, very seldom, unless they have had direct interest with us, they really don't see the markets the same way we do. So I apologize for that. I know that can be an emotional issue, but I just wanted to explain that. Jen, would you do a recap of the educational program?
Sure, no problem. For those of you that are new, our website is jimdeltontrading.com, and I just wanted to point out that you might want to go and subscribe to us on YouTube, because Jim puts out a weekend video every week called The Week Ahead, and then our official X or Twitter link is there as well. But if you go to courses at the top navigation of our website, you'll see that the intensive is featured up there at the top, and it does run from June 3rd to 28th. We do have the prerequisite requirement of the foundation and application of the market profile eCourse, but right now we also have limited time discounted bundles, so you can get a nice discount for purchasing more than one course. And if you don't have the prerequisite requirement done already, then you can purchase that bundle. You'll also see here that we've got the schedule for the intensive here as well. This is a PDF. You can download this. The times are posted in Eastern time, so you'll need to change it for your time zone. But we have a lot of clients from around the world. They can't always attend all of the webinars live because of the time zone issue, or because maybe they, clients have a day job and they won't be able to attend all of the webinars live. That's not a problem because all of them are recorded. You will get access to materials for a year after the course finishes because it's so webinar heavy since it's a month long. We understand that. So you get a year after the course is finished to go back and review and rewatch everything. You'll just notice here that in blue, we've got kind of like our special presentations. Things in red are more like news or economic releases, for which we'll be live with you in those webinars. If you've got any questions with regards to our courses, need some clarification or what is right for you, I would be happy to speak with you. All you have to do is contact us at the number at the bottom of our website here, 409-422-7250, or shoot us an email at dalton@jimdaltontrading.com. Okay, Jim, I'll give you back the screen.
Thank you.
Okay.
Normally, we cut off the this morning.
Giving you the screen.
Okay. Normally, we cut off this morning webinar slightly before the opening, but I have no intention to trade right now, and I have no trades on. So I think we'll stay through and see what the opening gives us this morning. We probably won't stay too long after, but we will stay and see the opening this morning. So but the first thing we're looking at is the overnight inventory is long. This is the settle at I think it was 51.31.50. Overnight inventory is 100% long. I'm repeating what I said before, but we know the odds are about 75% that there will be a counter auction to overnight inventory. If there is not that high odds counter auction, that is also informational intensive. That is usually an indication that at least on the day time frame, the market will open with some strength. A lot of times I get questions about how do you know if there's going to be a trend day? And of course, my standard answer is, I don't know. If I'd love to know, then I wouldn't have to do anything else. But one of the things we do look for is how much confidence there is surrounding the opening. Quite often, if there is high confidence surrounding the opening, the odds of a trend day are greatly increased. So what would be, as an example, what would be high odds today? High odds today would be that we don't get a counter auction relative to overnight inventory. Now, that's only one factor, and then you still, you look at developing value and direction. Low odds would be that the market, we do get the counter auction and the market does go back down and reach the settle. Now, overnight inventory doesn't have to be 100% corrected in order for there to be high confidence. One of the trickiest situations, and I'm going to pull up and I'm going to look at, this is Friday. So you can see here's the settle from last Thursday. So Friday, the market opens sharply higher. Inventory was, very long. But this is a lot of times where the trap comes in. The market opens, which is the green dot, and it immediately sells off. And that selling is met by buying. So this would still qualify as a high quality, as a high confidence opening. And you can see the kind of day that was delivered. We got some selling late in the session, but this was high confidence, but the market did not correct overnight inventory. The biggest trap that short-term traders fall into is this immediate sell-off in here. When the market sells off following the open, they get trapped by that price decline, and then the market goes the other way because you really don't get a full-scale correction of the overnight inventory. The last thing before I take questions, as I've continued to say, I'm writing a new book, and it won't be out for probably a year, by the time they go through all the processes. But what this has done, it has caused me to rethink and reevaluate everything that I've talked about over the years. And what that does, it refreshes my thinking. It means everything's kind of been reviewed and challenged. All right, Jen, let's open up for some questions, please.
Okay. Let me see here. You've mentioned that bigger money takes positions 2 to 3 days ahead of a pre-scheduled major event like the FOMC. How does the profile show or tell this?
It's not exactly what I said. What I said was, or what I normally say is, if larger institutions or money is going to make adjustments to their portfolios, it is very often made a couple of days prior to the announcement. And the reason for that is the day prior to the announcement itself, the market is usually very thin. Now, the dream of what does show in the profile, that's simply a dream. It's not going to show that. You have to look overall at the confidence in the market, where value, volume, etc. But remember, institutions go to great extent to hide what they're doing from other traders. Anytime an institution is engaging in a trade and it's discoverable by whether it's short-term traders or even other longer-term traders, those traders will front run or do their best to front run their order. So there, as I tell the story over and over again, many, many years ago when I was clearing locals in Chicago, one of our locals made $5 million one year executing trades for one of the large hedge funds. It was simply to disguise what they were doing. I'm sure it's gotten much more sophisticated since that time. And there's so many other ways to hedge anymore with options. So it's a dream that you're going to see that in the profile. It's not going to be illuminated as you would hope. Okay.
Okay. Following years of scalping with lagging indicators, your teaching of profile has slowed my trading. Yet sometimes I revert back to my old ways of jumping into trades based on indicator readings. How can I curb this tendency or temptation and stick to reading the profile nuances as it develops each day? Thank you for your webinars.
What I say so often to questions similar to that, that's a habit that you have formed. And once habits are formed, there is no easy solution to changing that habit. I was a 3-pack-a-day smoker for years. It probably took me 50 times before I successfully quit smoking. Whether it's smoking, whether it's gambling, whether it's liquor, whether it's trading, habits, the first step always is recognizing the habit itself. Recognition is the first step. Then it's a process to start to break that habit. We strongly recommend a couple of books. One of them is Atomic Habits, and the other is The Power of Habits. Both of those are on our book list. Jen, you want to show those two books, please?
Sure. One moment. Let me take the screen back.
And while Jen's putting those books up, a lot of times when we revert back to those habits, it's when we're under stress. When we're under stress, we have a tendency to revert back to what we knew in the past, even if it doesn't work. It's just kind of a fail-safe, well, we think it's a fail-safe mechanism. It's kind of a human response, the way it's built into the brain. Jen has highlighted those two those two books in there. They really talk about habits. Another book that I like a lot to really help you understand how the mind, really the brain really works. It's called Live Wired. Jen, is that up there? Live Wired. It just does a wonderful job of, just walking through the complexity of our brain and the way it works. It's quite surprising, and there's so many things that take place that we don't even consciously understand that they're taking place. I've just finished reading that for the second or third time because it is so very, very interesting. Okay, other questions, please.
Okay. When you say the settle, what time are you using? 4:15 or 5 p.m. Eastern?
We use the official time established by the Mercantile Exchange, by the CME.
Yeah,
Are
so
we
we
back on my
we
screen,
go to
Jim?
the CME website and get the settle and the last figures directly from the website. Why? Because then it's consistent across the board and we don't worry about data discrepancies from platform to platform or data feed to data feed. Okay, how do you determine that? You want me to give you the screen back, Jim, or do you?
Please, no, you can give me the screen, please.
Okay, one second. Let me give that to you. Okay, I've given you the screen back. Okay, next question. How do you determine the overnight inventory is 100% long? The open was 5140 and the 5130s have been touched and retested, thus more balanced.
Okay, we used the previous day's settle. The settle on Friday was 51.31.50. 100% of the trade that took place from the opening on Sunday night has been above the settle. Having been above the settle, that means that 100% of the overnight trade is long. Now, I understand there's both buying and selling in there, but overall inventory is going to be long. Other questions?
Okay, somebody mentioned, ironically, I just finished the book, The Power of Habit. Jim doesn't require this to take the courses, but it should be.
Yeah, they're wonderful books. They're challenging. They're challenging. It's one thing to read about this stuff. It's certainly another thing to put it in action. But as we say, anytime you're going to address a habit, the first thing is recognition of the habit, and that means an open recognition to say, I have a habit and I need to work on it. Without facing up to that, you're not going to get a good start on the habit. And it's frustrating because you start, as I said earlier, you start to change a habit. And then what happens, you come under pressure or, you get tired or the market really starts to do some crazy things. And you have this tendency to revert back to a comfort zone you had earlier. That doesn't mean the comfort zone was right, but it was something you did earlier and you had a tendency to jump back to it. When I talk about how many times it took me to quit smoking, I can remember the one time when I thought I had smoking beat, and then all of a sudden I was president of a discount futures firm in Chicago, and all of a sudden we got a call from a regulator. There was a serious problem with one of our clients, and initially they were trying to associate us with the client, which we weren't, but the stress and the call is one of those things that stressed me out. And my immediate thing was to reach for a cigarette. And that started me up again. They're very frustrating to break habits, but it's recognition of what the habit is. And then it's just serious work and determination to correct it. Okay, what else?
Okay. I use Thinkorswim and the daily charts show that the last rally in the ES futures came from a 100-day moving average Is this a sign of mechanical traders, and does it increase the odds of a reversal sometime in the future?
Not necessarily. Maybe I read it wrong. I thought the last low came from almost exactly the 200-day moving average. RJ, did I read that wrong? I thought it was almost exactly to the tick on the 200-day moving average. That doesn't necessarily mean it's going to be reversed. It just gives you a better orientation of what was going on. When I talk about the moving averages, I look at the 50, 100, and the 200-day moving average. I pay the most attention to the 200-day because I have found over the years that more longer-term money or investment money pays attention to the 200-day moving average than any of the others. Okay.
I think it was 100, Joe.
Was it 100?
Yeah.
Okay. But I think it came from almost exactly that level.
Okay. Does the intervention by Japan on the yen have any impact on short-term traders in the S&P?
It can, but I think you can't say that directly. I think you have to watch and see what the market itself does. You know, I mean, there's been all kind of rumors. We had a rumor last week. I think it was printed on Reuters that Japan was going to stop buying U.S. bonds, and of course that put a big flurry in the market very quickly. So it can, but I think you never want to draw a conclusion that that's going to happen because it's so much depends on how much it was anticipated ahead of time. Okay, so we're going to open sharply. We are right at Friday's high. Right now, it would gap higher. Overnight inventory is long. The strongest market is when there is no counter auction or correction relative to overnight inventory. Jen, you want to put up your chart? Mine's always slow to come up.
Sure. 1 second. Right. Can you see my charts?
Yes. Okay.
Okay.
So this is always a difficult area. The market looks above the overnight. It looks above Friday's high. Now the low this morning is weak because it is exactly at Friday's high. When you see that, that's a sign that the buying there was weaker hands, daytime frame traders for the most case. That doesn't mean they're not going to be right, but it's not a sign of strength when it's coming from a very exacting or mechanical level such as that. So the market value is building higher at this point in time. The low is exactly at the high from Friday, also correspondence to the top of value from Friday. This is consistent with the market being so heavily oriented towards shorter term daytime frame traders. Momentum, they tend to go with momentum. Okay, other questions?
Okay. A comment that somebody shared here. Overall, I feel very fortunate to take these courses. In my opinion, we are actually being taught a true foundation. Read The Power of Habit, and a person will see how and why the avalanche of buy here, sell here courses and programs that are out there are so enticing. But with this program, you'll figure out if you really can trade. This is hard work, but we are being shown here where we really have to start with ourselves. But by the way, these teachings can be applied way beyond trading. Thank you for your comment.
Thank you very much. All right, any final questions?
Yeah, somebody's asking, you've mentioned that the market's being flat before news days. It seems that the market has been more flat on chop days, 10, 20, 30 points on the SPX. Do you think this is more from AI algos fixing the best price in market? Will this soon eliminate day traders?
I don't think so. I think there's I think there's an over focus on AI, on algorithms. I think what's most challenging, or what may be most challenging for day traders, the New York Stock Exchange was asking last week about 24-hour trading. And when I saw that, I said, well, that may change how I look at markets. I mean, that's just it's a question they ask, so it means it's being thought about. There's so many other markets that are 24 hours, but I still find that there's still an awful lot of activity that centers around, the U.S. markets, and particularly the release of, announcements and economic releases, etc. Okay, final question.
Okay. Does a rising VIX along with a rising SPX price suggest the move may be weak?
I think the rising VIX just introduces a tremendous amount of uncertainty in this market. And as I said, I think the uncertainty is very high, particularly coming into, Wednesday and Friday. I started off by commenting that the frustration among the institutional market is that this market is so heavily oriented towards, very short-term daytime frame traders. And I think that's indicative of what the market did today, at least to start with. I mean, the low is exactly at, Friday's high. I mean, that is not where institutions come in and become active in the market. This is exactly where short-term, weaker hands, daytime traders become active in the market at exacting levels that they can see. And a lot of times that's the extent of their research. Now, that's not necessarily bad. What's important is that you learn to recognize what is being done, how is the market acting, and who's in control of the market. Once you start to understand that, it makes trading, it allows you to adjust your trading to the market. Remember, the market doesn't adjust to you. You have to adjust to the market. Okay, final question.
When the market opens so strong, is that a sign of shorts panicking and covering?
Yeah, I'm not when you use the term strong, I'm not sure that higher prices necessarily translates to the market being strong. When the low is exactly at Friday's high, that to me is not necessarily a sign of strength. And higher prices are not necessarily a sign of strength. Actually, when I see the exactness of that makes the exactness of that low, that makes me question the strength of the market overall. Okay? Anything else?
No, I think we're good.
All right, let me say thank you very much, and I do hope you consider some of our programs in the future. Thanks, bye.
Yes, if you've got any questions, like I said, please contact us. If you're wanting to join us for the intensive and you need to do the foundation and application of the market profile eCourse as a prerequisite requirement, you want to purchase early so that you have enough time to go through the foundation eCourse thoroughly. So this is a bundle that I was talking about that contains both. We also have other bundles for people who've already done intensive and maybe want to do the advanced nuances eCourse if you haven't already done it. And if you've already joined us for an intensive previously, right here for the intensive. So thank you so much, everybody. Thank you and have a great week. Bye-bye.